Hello, and a massive hello to everybody. This is 50 Pips rocking and a rolling 10th of January 2016. Not making any trade calls or recommendations, as you and only your response for the trades you may decide to take. And the fact that you're listening to this means that you've read, you understand, you accept all the disclosures on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, what's going on, guys? All about equities, all about how we're going to open tonight. Should be interesting. Let's see what happens. Let's just talk through some charts. Going to try and keep it fairly simple. I mean, really, it's all about the ES with all the China news, right? So what's happening here? So we've got a very aggressive move to the downside. I think, worst first week of the year in ages or ever, and very heavy tone. So what's happening? I think the level to watch here is as we're starting to base, you see we're coming into this area and we're already into the support zone, right? So I think, of course, the big question is, are we going to gap down? Are we going to cause a bit more pain to the downside? We'll have to wait and see. But I think here, unless we completely crumble, right, which is always a possibility, chances are that we'll see some kind of a bounce. I think the big question is going to be, where is it going to bounce to? Now, to the downside, the next level is there's not, so you see all these wicks here, right? So actually, let's do it this way. Got all these wicks. So all the times we came back down, the market pressed all the way back down into, 1848, so 1850s, and here we made it all the way back down into the 1810s, right? So you see we've got that 200 weekly moving average that is going to be coming up. So, this is probably the ultimate support, or at least short term, what we would be looking at if this really starts to get extremely heavy this week. But I wouldn't be surprised to see us bounce before that. Short term, in terms of a psychological level, we'll have to see how we hold around the 1900 mark here. Above or below, that's going to be a big bull bear line for the week, and especially for the open. But that's what we've got to the downside. I think in terms of bounce zones, one thing which is clear is that we've got that 100 DMA now that's going to be coming in around the 2000. So I think, anywhere most people are going to be trying to short anywhere the 2000 into the 1990s, 1995. So that's probably going to be on a big bounce. That's the first level I would be focused on. As long as we stay below there, this should continue to hold very heavy. If we trade back above the 2000 in terms of a daily close this week, then I would not be surprised if we make it all the way back into the 2050. But this is the place I'd be looking at, right? Looking at downside possible moves into the 1850s, and to the upside, those 1990s, even 1950s. That's where we are. Again, very difficult to call. We'll have to see what the open all. Clearly, pressure is on, but remember, price doesn't only move in one way for a sustained period of time. So even though it could continue to press lower, a little gap, watch at 1900 for bull bear line. Very bearish below, and above, would not be surprised to see some kind of a healthy bounce, even though you'll probably see a lot of sellers trying to press it all the way back down, okay? If we're looking at gold, which is another interesting one, which we've been talking about, we see that we've had a decent little bounce, right? If we put those moving averages back on here, you see we've made it back all the way into that 100, and I think that's a pretty good gauge, right? So if we talk about this is the 1100. So I'd say 1100, bullish as long as we hold above. To the downside, 1050. To the upside, 1150, right? So that's where we're hovering. I think a lot will depend on the equities. What I would look at is that this 1100 day close bull bear line, above there, also daily close above the 100, then we would expect the 200 DMA to attract. If we get a daily close back below the 1100, we would expect downside and that 50 DMA to attract. I would use those pretty much as your levels to give you an idea for context, mid, upside, and downside. Okay. Another interesting chart, I think, going into the week. Okay, well, we should look at euro because everybody's probably very interested in euro. What's happening is we're getting a little bounce. Now, all things being equal, we're still stuck inside this big range. And as we said, we'd not be surprised to see a move to the upside. If you look this top to the bottom of the range, let's call it here, just to give you some kind of context, you see that the 50 back is coming in at 1090. You can call it 111. So we consider that 1090 as the kind of Momo line, right? As long as we get daily closes below, we could still see some moves to the downside. Daily closes above, we'd expect to see a lot more of a bid tone coming into the market, potential for a lot more of a squeeze. You see this descending trend line is also coming in pretty much smack on that level. So fairly interesting action. The way the chart is coiled, or the candles are looking, it looks like it's coiled, trying to make a little bit move to the upside. That could coincide with the market gapping down if it gaps down, but I think that's the focus to the upside. To the downside, you'd have to look at those lows, those recent lows coming in 106.90s, 107s. So it looks like we could see an awful lot of choppy action, but that's pretty much what I would be looking at going into the week. Again, keeping in mind that we're still in a choppy range, right? But it does look like a little bit more upside. It's also going to depend on the market. Another chart which we looked at, which was interesting, was Euro JPY. We said it was very, very aggressive, especially once it broke down here. We said if there's any place to try and look for a bounce is on the move back into the support zone and into the downside channel. We actually got a decent move, about 100 pip bounce here. Still the same. Look at coming down mid-channel, coming in with a breakdown zone. This is going to be the bull-bear line. Looks like it wants to retrace as long as it holds above there. Sorry, below, more upside. If it can get daily closes above, then wouldn't be surprised to see a little bit more of a correction there. Okay. Now, another interesting chart we've got just through memory, just going through a couple of the interesting charts, is the Kiwi, right? Holding on a little bit more than Aussie, trying to rotate higher after we had this big candle to the downside, this kind of fake out play here to the downside, which is holding, rotating. So I'd be very, very curious to see how this trade. It looks like the sellers are clearly trying to cap those highs, and the big question is, are the buyers going to step in and support? So I think here short term we've got support back down into those 63.80, 63.90, so you can call it the 64 zone if you want, and then you've got those 69s to the upside, and we should see a lot of choppy action there, but those are the real levels to look at. Expect to see a lot of velocity inside range. As long as we stay inside this area, we need to break outside to see more Momo, I would suspect, right? Another chart which a lot of people were talking about, we posted on the blog, is cable. If you look at it on this daily, what we said, it was coming into a very interesting zone right back into there. We said if it was going to bounce, it'll probably try and bounce there. We like to look for positive closes at lows for these kind of bounces, and you see what happened is the market did not confirm. Even though we had a lot of wicks to the downside and it was having trouble, we did not get a positive close at lows, so this is not a long trigger for us. This is still a bearish close, so you see it's holding below, but I think going into the week it's going to be fairly interesting, right? Because as long as it holds below this breakdown zone, I think, Brexit, et cetera, et cetera, et cetera, it's going to be very, very difficult for this to catch a bid. If we start to get a daily close back above there, then I would expect to see a healthy bounce. Keep in mind that even a healthy bounce could just be a correction inside, everybody's probably still going to be looking to sell any bounce here, right? But this is really the key level to look at from a closing basis, especially from a daily closing basis, right? Now, which is coming in, at those 45.60s. What else can we look at? Let's look at yen. What's going on yen? Let's get this up. We had a very interesting area here, right? So we talked about the 118, and we said What's interesting about the 118 is that, you know, in the past, what we've seen is that all these aggressive presses back below have always caught a bid. Now here what's happened is we've actually got a daily close below. So this is pretty bearish, right? Fairly bearish. And it's similar to the ES. It looks like it may have some more downside. I would be cautious because you've seen, you know, the market's had a lot of support into these areas. But, you know, clearly if it holds heavy, you know, this 115.50s could come into play, but what I would be more interested in is not necessarily trying to chase Momo here, but look at how we behave in terms of daily closes around this 118. Any bounces and daily closes below, I would expect to stay heavy for continuation of a move down. Daily closes above, then I would expect to see a little relief rally, you know, maybe even back into the 121s or something like that. Okay, so that's what I'm looking at going into this week, guys. Have an awesome one. Let's see the open. It'll probably be very, very interesting. As always, thanks for listening and have a great one. I'll see you guys on Twitter. Just hit me up if you have any comments, any questions. And again, if you like the content, don't be shy about sharing it or retweeting it. Thank you so much. Bye-bye, guys.